Hi everyone, today I'll be interviewing Lorne. Lorne was born in Toronto, Ontario. He started in the life insurance industry in 1993 with Metropolitan Life after completing his MBA at the University of Windsor and has been helping families and business owners meet their insurance needs for over 20 years. He has won numerous sales and service awards and has appeared in the Toronto Star, the Globe and Mail, the National Post, the Toronto Sun, the Investment Executive, and Money Sense magazine. Lorne completed his Certified Financial Planning designation in 2000. In 2009, he instituted a 4-day workweek for LSM insurance employees, which was a huge hit, combining lower fuel costs and commute times with increased morale and productivity. This continues to be a passion for Lorne, and he has been quoted in media outlets across Canada as he continues to push for more widespread acceptance among larger corporations. Lorne, thanks for joining me today for our webinar. I appreciate you taking time out of your busy schedule.
You're welcome. Nice speaking with you.
Oh, you as well, my friend. It's been a little while. Note to our listeners and viewers, if you haven't had a chance to read Lorne's chapter titled Seniors Life Insurance, 6 Factors to Consider, it's definitely worth a read. There's tons of great info in it to help you determine your life insurance needs at this point in your life. Lorne, thanks for your great chapter in our Project 60 Meg. I learned a lot from it, and I'd certainly like to learn more. Just wonder if you can expand on each of the 6 points.
Sure thing. I mean, there's a lot of different factors to consider when you're looking into life insurance, especially for seniors now. There's a lot more variables than there were even when I started doing this around 23 years ago. I mean, you have things like the increasing debt load in Canada, so that's a bigger factor for people. A lot of seniors have mortgages that didn't have mortgages before, which kind of goes to one of the first points, which is an individual life insurance policy versus, let's say a senior taking out a creditor insurance policy. One individual life insurance policy is usually a lot less expensive, especially for non-smokers. And there's also a whole host of benefits. You have coverage that's level versus coverage at the bank that's decreasing. You can keep that coverage if you pay your mortgage off. The coverage is portable if you move to another home. So there's a wide variety of benefits to having an individual life insurance policy versus a creditor insurance type policy. And that would be one of the first benefits, which would apply to seniors, and it would even apply to some people that are just short of being seniors as well.
Mm-hmm. Well, very cool. I think like if we just go by point from your chapter, like certainly lots of great info in the chapter, but I'm sure you can share a lot more information if you could keep just a bigger picture of, everything that you offer and what to look for.
Sure. Why don't do you want to list off maybe what we'll do is you can list off one of the points and then I'll kind of expand upon that point. Do you have the points in front of you or no?
Unfortunately not. Give me a second here. I can probably
list off, if that's okay. I have the points on my, I have them pretty much memorized, but I'll go through the points and just have them on my other phone here.
Okay.
And expand upon them as we're going along. So the second one would be the costs differences among different companies. So if you look at one company, let's say that's offering, there's 2 main types of insurance when it comes to life insurance. There's term and then there's permanent insurance.
Mm-hmm.
Insurance starts off lower, but goes up as you get older, whereas permanent insurance starts off higher, but never goes up as you get older. So a term insurance policy can differ from one company to another. And then the underwriting protocols can also differ quite a bit from one company to another. So that's the big advantage of using a brokerage like LSM.
Mm-hmm.
We're able to, and we're not just associated with one company. We're able to shop the market and find you the best possible value. And in addition to that, which I'll go over a little bit more, we do a lot of work with seniors who have had past health issues. We can make sure we get them the best possible value as well.
Very nice. I wasn't aware about the different options out there. Like, I was somewhat familiar with, say, the term and, the other option that you mentioned there. I just didn't realize, the extent of how much a brokerage firm like yourself could certainly help out that area. So that's very wild information.
Yeah, no, that's great. Well, I'm glad you like it. And, to kind of expand upon that point of the cost, which is kind of the second point we mentioned, is that it even becomes that much more magnified with seniors, because the cost difference among companies for, say, someone in their 30s or their 40s is very small.
Mm-hmm.
Whereas the cost difference for someone in their 60s or 70s between one company and another can be very substantial. So that's something to factor in as well, and something we go over, and something we can really help with is the cost difference can really change from company to company as you get older.
Mm-hmm. Well, it's like, I know from personal experience when I was younger, I just basically went with the first policy that was presented to me, whether it's the best or not at the time. I didn't know, about the different options, what to look for, anything like that. I wasn't even aware of brokerage like yourself, to help people kind of fine tune their selection.
Yeah, well, life insurance, it's something that a lot of people don't really put a lot of thought into. There's a saying that people will spend more time planning their vacation than they will looking at their annual vacation than they will looking at their finances. And in
Mm-hmm.
terms of the finance, life insurance is sometimes looked at last because it's not a tangible asset that you can touch, like a car, or a house, or jewelry, or something along those lines. But that doesn't make it any less important. It's something that can really impact people's lives.
Mm-hmm, definitely. Well, and something like this, we're really not taught too much about the importance of this. Say when we're younger, it's just we tend to take things for granted. It's, even as you're starting to establish your career in your early 20s, thinking oh, well, I'm not going to worry about life insurance because I've got so many years ahead of me. I'll worry about when I get older. But I figure the sooner that people start off with the planning, the better. And if you can lock yourself into a better rate that does not change as you get older, it might be one of those things where you pay a little bit extra in the early stages, but it pays off a little bit later down the road.
Yeah, no, for sure, for sure. And I guess the third point that we'll go over, and we kind of touched upon this a little earlier, is the individual life insurance versus the creditor insurance, which we spoke about with the seniors having an increasing debt load in Canada, is that the individual life insurance policies, you're able to keep those even after your mortgage is paid off, which is really critical for seniors, because you might have someone in their 60s right now,
Mm-hmm.
have a mortgage, but they may not keep that property another 5 or 10 years. And
Mm-hmm.
the nice thing about an individual policy is that they can maintain it even if they move homes, pay off their mortgage. They're able to keep the value of that policy by maintaining the coverage.
Very nice. And you're also talking about, say, preferred rates and how they can save money on your premium.
Yeah, exactly. So this really ties in a lot to your to a lot of what you're speaking about, because more and more seniors are trying to stay healthy, trying to stay active, and so that's something that can really benefit them, not only in their lifestyle but in their life insurance. If they stay really healthy and they're active, they can qualify for preferred rates. And what preferred rates are is they're rates above the normal rate for those healthy people, and you can save up to 30%. So if someone's in good health, it can really help out. Insurance companies also usually have a standard rate, one level of preferred and then a super preferred. So even if someone's not perfect, they still may qualify for the next level above a standard rate, which can give them pretty big savings. But it gives people that much more incentive to stay healthy and stay active and stay fit.
Wow. Very cool information.